Hey there everyone, and welcome to this video on our video series with regards to FAC1501 for semester 1 2020. Okay, so if you've been following our video series, you'd know that we've done just a bit of a short insert on this assignment where we just go through the questions and we actually do a detailed walkthrough. Yeah, I think that's the right word to use, of what to expect or how the calculations should be performed, right? So if you haven't checked out the other two videos, please do so. This is the final video. It's a 3-video series or a 3-part video series. Please make sure that you check it out. It'll be useful for you guys when you're doing your revision, especially. You probably do have the memorandums, and that's good, but it's not just about having the answer. You need to know why you got to the answer. So that's something that I always emphasize on quite a bit. But yeah, if you've watched any of the previous 2 videos, you know all about that already. So I'm just going to get straight into it, right? This quote should be a very familiar quote if you've been seeing this, if you've been watching this from the start. So as I said, before, if you are new, I like this quote particularly. I always say, don't wish it were easier, wish that you were better. And you're going to see as you progress through this course, this is not an easy course, but you just need to bring yourself up to the standard that you need to be to rise up to these challenges and make sure that you are able to overcome any challenges which you get, because there are times when you get stuff, and this isn't, a simple, straightforward course. But if you're able to rise up to the occasion and you are able to meet the challenge, then you're going to be able to navigate through it with, as little disruption and difficulty as possible. Okay, but I'm not going to sit too much on that. So we've done questions 1 through to 8. So now looking at question 9, and question 9 reads as follows: the payments of the creditor will, is option 1, increase the current liability of the entity, increase the non-current liability of the entity, decrease the current liability of the entity, decrease the non-current liability of the entity, or number 5, have no effect on the liabilities of the entity. Okay. So this is a straightforward theory question. I would expect that you would know these relatively well, or that you would know the answer to this. So I'm assuming that you guys have already answered it. So I'm just going to go through to the slide which has the answer on it, and it says decrease the current liability. So if you got this question wrong, you need to ask yourself, why did you get it wrong? Okay, it can't be option 1, because obviously if you're paying a creditor, the creditor is coming down, so your liability is coming down. You should know that a creditor is a liability, right? Increase the non-current liability. No, it can't increase, right? Number 4, decrease the non-current liability. Decrease is right, but not a non-current liability, because remember, a creditor is a current liability. Okay. So now a what is issued to prepare a cash receipts journal of an entity? A check counterfoil, cash register roll, credit note, general journal voucher, and all original cash note received. And this is again a straightforward one, cash register roll. If you got it wrong, please go back to the theory. It's quite a simple one. Wouldn't expect you to have had too much difficulty with this one. So just make sure that you go back to your theory if you did make a mistake on this one. It's nothing too complicated. A what is used to record the cash payments and small expenses within an entity? First one, cash receipts journal, cash payments journal, purchases journal. Oh, there we go. Okay, general journal and petty cash journal. Okay, so just had a small mix up of the slides. Okay, but those are our 5 options. So it says a what is used to record the cash payments of the small expenses within an entity. So I know a lot of you guys would have probably opted for option 2, which says a cash payments journal, but look at the question properly. It says the small expenses. Okay, so the small expenses relate to your petty cash journal. Okay, your cash payments journal is typically for your larger expenses that you're buying in cash. So if you're gonna go buy a computer in cash, then you'd typically record that in your cash payments journal. But if you were buying something like tea or coffee for the canteen at work, or you were just buying stationery, small items, really very, very, I wouldn't say insignificant, but tiny amounts, just those types of general expenses, that's going to go into your petty cash journal, right? So, but again, small small expenses. Okay, question 12 was a bit of a tricky one for some students, but we'll go through it step by step, right? So I said that, oh, well, not I said, the assignment said that the actual cost incurred by an entity, which is a VAT vendor, that is important, right? When a computer is purchased for 5,700 Rand, inclusive of 15% VAT is 700 Rand, 743 Rand, 5,000 Rand, 4,500 Rand, or 4,957. Okay, and if you look at the answer, it's 4,957. How did we get to this? Okay, so we've seen the amount that the entity spent is 5,700. This is including VAT. Okay, now we see that the entity is a VAT vendor. If the entity is a VAT vendor, it means that they can claim the VAT back. So we need to take out VAT from this to see what their actual cost is. Okay. If they were not registered for VAT, then we wouldn't take the VAT out and the actual cost would be 5,700. So all that you do is you take the 5,700, you multiply it by 100, and you divide it by 115 to get the amount excluding VAT. Okay, so 5,700 times 100 all over 115. Okay, so that is the calculation, because remember that the amount including VAT is technically 115%. So we want to get the amount excluding VAT, which will be 100%, because remember VAT is 15%. And that's how we get to the answers. As straightforward as that. So do it on your calculator and make sure that you got it. And if you having some trouble getting the answer, please type it out in the comments below. I will receive a notification of that, of your comment, and then I'll come and answer it. Okay. Okay, question 13. What is the effect of interest received on the accounting equation? Okay, so first option says equity will increase and assets will decrease. Equity will decrease and the assets will increase. Equity will increase and assets will increase. Equity will increase and liabilities will decrease. Equity will decrease and liabilities will increase. Okay, so let's look at our answers. Straightforward one as well. Equity will increase and assets will increase. Okay, now the question is why, obviously, right? How did I come to this? Some of you might have gotten this one wrong. Think about it this way, right? What would your journal entry be? Okay, if you were recording this in the accounting records, so what will the journal entry be? Right, so you're going to say debit bank because you've received money, right? So debit bank, credit, interest, income, right? You've debit bank, which is an asset, correct? Right, so your assets are increasing. Now you've credited interest income, which is an income item. If your income items go up, your profit goes up and your equity goes up. So anything that pushes your profits up will result in an increase in equity, okay? And vice versa, anything that decreases your profit will decrease your equity. So based on that, since our income went up because we've credited interest income, so income went up, our profit therefore went up and our equity went up. So therefore it is equity will increase and assets will increase. So guys, you see, it's really simple. When you just take it step by step, it's not hard. Okay, question 14. Assets are all the resources controlled by the entity. Number 2, equal to equity minus liabilities. All the resources owned by the entity equal to equity plus liabilities. So the options are A and B, A and D, ABD, ABCD, ABC, right? And the answer is A and D. Now remember that it has to be, and some of you would have gotten confused and thought that it's all the resources owned by the entity, and that's not the case. Remember, right? That was sort of the trick in this one here, right? It is not the resources owned, the resources controlled. Think about when you lease an asset, you don't own that asset, right? You lease a car, you don't own the car, but you recognize it as an asset in your books because you control that car. You have the rights of the use of that car. You control it. Nobody else can control that car, right? You have that control over the car. So that's what the principle is when it comes to looking at whether something is going to be an asset. It's not necessarily ownership, it's whether you control it or not. And the last one, credit losses will be regarded as number one, current assets, liability, income, a non-current asset or an expense. I would not have expected any of you to get this wrong, but it's an expense. Okay. Now, as I mentioned before in my previous videos, if you've made mistakes, look, it's fine. You expected to make mistakes. You're a student studying. And if you're doing FAC1501, chances are you are a first-year student, so it's your first exposure to a tertiary institution. So a lot of things will be very different. So what you got to do is you just got to go back to the study guide. You have to identify the theory that you did not understand. And most of these have been theoretical questions, okay, and questions testing principles. There weren't really that many calculations. It was predominantly theory. Understand why you got it wrong. So did you read it wrong? So think about our assets question, right? Maybe you read it as owned by the entity when in fact it's controlled. Now you understand, oh yeah, that's where your mistake was. So that's what you got to do. And then attempt these questions again, okay? Do it again until you get it right. Because when you get it right, then you know that you are on the right track and you understand what's going on and you're getting to where you need to be. So if you're not where you need to be, if you wanted to get 100% and you got 80%, then follow this process and make sure that you get that remaining 20%. That's what I would really highly advise guys to do. And if you don't understand, please ask questions. I mean, you've got quite a few groups and on Facebook and you know, there's definitely room for you guys to make the most of this. And I want you guys to do it, you know, so please use every opportunity you can to ask questions, and you can even ask questions on the comments below. We'll respond to as many as we can. So if you have a question, just type it there, and we should receive a notification that there's actually been a question there, and we'll attend to it. Okay, so for more videos, and we are going to be uploading a lot, please subscribe to our YouTube channel. If you've really liked this one, we'd appreciate a like as well. But to be notified of future videos, please, we'd really appreciate it if you click the subscribe button. Subscription is absolutely free, and you click the bell icon. That way, each time we upload a video, you'll receive an automatic notification of the video. So it's basically delivered straight to you. You don't need to check the group. You don't need to check YouTube. You don't need to ask, you know, anyone, did we upload a video or not? You'll receive it on your phone automatically as a notification. As you know, the way Facebook would give you a notification, you're going to get a notification. Okay. So, and we are going to be uploading a lot of videos. Like, we are aiming for at least one a day. So we don't want you to miss out on it. So please make sure that you've clicked and you've click the bell icon and you've subscribed. We've had a lot of students who have actually done that. We see on 900 and something at the moment. I think it was 950 at the time that I recorded the video, a little bit more than that. So we're really doing a lot. And, you know, this has been a very, very good initiative, and we're really proud about it. But we need to sort of get your support from it, and your support is going to be by sharing this video, by really responding and showing us that this is actually helping you in some way. And if not, please give us feedback on how we can make it better. Okay, please also follow us on our social media channels, because we have an Instagram account, we have a Facebook page as well. We're going to be uploading a lot of free resources there. You know, there will be videos, there will be tips, there'll be notes, there'll be strategies, a lot of content coming away. So we're not going to put everything on YouTube. We are going to be things on our other social media channels. So please make sure that you are part of each one of them so that you can get the maximum benefit from this. Okay. And that's it for this presentation. If you liked it, as I said, please give us a like, a thumbs up, share the video, subscribe. And be with us on this journey. We really want to make this thing a lot easier for you guys. It does not need to be difficult, but obviously if you don't have the resources that you need, then it will be a lot harder than it needs to be. And we're trying to alleviate some of that, especially during such a tough time. But that's all from me for now. I hope the studying is going well and that you guys have gotten your final timetables at this point. I really hope so that you guys can start studying. We will be holding classes on this. I will keep you guys posted on that as well. So I'll post, you know, on our social media channels with regards to what our classes are going to be, you know, fees, etc., etc. So please just keep an eye out for that. But other than that, thank you very much for joining or for watching this video rather. And I hope that it's helped you, and good luck and all the best with the studying.